Dave
Hey Dale, can
Farber.
you hear me?
Got you, Dave. How are you, buddy?
I'm great. How are you guys doing today?
Okay, so some interesting action since you and I and your last visit with us, Dave. If you want to share your screen, perhaps we could
Absolutely.
talk about what's on your radar here. Okay.
Great. Can you see that there?
Yeah, we have copper. So I mean, an amazing run from COVID.
Yeah, so
And
for
yeah, go ahead.
I was gonna say, Dale, first and foremost, thank you so much for bringing me back on. Really appreciate it. Enjoy the time we spent together. And yeah, it's been a very interesting couple of months over the last three. I think the general theme I'm seeing in my analysis in my macro analysis is a general rebalancing going on underneath the surface in the equity markets. But in the end, everything looks bullish, and it looks to me similar to some of your other speakers moments ago. Obviously, different time frames, but it seems to me like commodities are the theme for the next many years.
Okay, so you're a believer in a commodities super cycle.
Yeah, I guess it's not so much a belief, but more so the what the charts are suggesting.
Okay.
And if so long as the charts continue to suggest that, then that's definitely the way we'll be positioning our portfolios.
Okay, so even in bull markets, sharp corrections can occur. When you look at this, looks like you have a little pennant or triangle
Yep.
that we're in right now in copper. I guess you would anticipate um, that it would break out in the direction of the trend, which would be to the upside. Let me ask you this: does any of the divergences that I see you have RSI up there um, bothering you at all, that were, well under, even though this is, what is it, a monthly chart or a weekly chart?
Yeah. So what I'm going to do here is I was looking through a number of monthly charts over the weekend, and
Okay.
I thought it would be a complete quote unquote divergence from some of the short term perspectives that you guys
Okay.
offer here. So
Yeah.
so when I do, for full transparency, when I do look at the daily and hourly charts on copper, there are some negative divergences, and I would not be surprised to see copper as perhaps the weakest commodity over the next couple of weeks if the equity markets consolidate or pull back. But with that said, on a longer term scale, copper looks absolutely bullish, and that's where we're looking at here. And I've got about 8 charts that, time
Okay.
permitting, we'll go through.
So that buy breaks in copper, I like the grains. I'm wondering if you include anything like soybeans. Had a very dramatic run. Let's see what your candidates are in commodities that you like. Go ahead, Dave.
Yeah,
Go to the
and
next
and
one.
I have seen some of these agricultural commodities. They do look good. The reality is my charting software just doesn't cover a lot of them, and frankly,
Okay.
I just don't focus on them. But as much as I do these, so let's just briefly take a look at
They
copper.
do have ETFs in the grains now.
That's true. That's
Yeah.
true, and
Okay.
those I do follow. I just, for
Okay.
whatever reason, haven't been as attracted to the agricultural commodities as I should be, and so
Well, you
maybe I'll.
can't eat copper, Dave.
That's a good point, but hamburger's delicious.
All right. So,
All
okay,
right.
copper, I concur with you. Boy, it'd be nice to buy a pullback to the breakout, wouldn't it? Around there,
Yeah.
around, yeah, three.
Yeah. If you look at the daily chart, I think any pullback will be closer to around 4. I don't think you're going to see it move all the way back to 340,
Oh,
but we have to
okay.
remain open to such a possibility if general equity markets do sell off for whatever reason.
Okay.
But the general theme that I'm seeing here and many other places is we've had years. And so this chart goes back all the way to 1989, just for perspective. But since 2006, all the way to where we are today, we've been frankly range bound between 2 and 460 here. And I think we're very close to an upside breakout of this pennant. When you look at RSI, one might look at it as a trader as overbought. But when I look at it in my analysis, RSI being over the 70 area, 69.1 Fibonacci level is where some of the most bullish moves in copper occur. Look back to 2005 when we broke above this area here. We went from 2 all the way to 426 before we ultimately gave up that move. So I think we're just getting started in copper, and so I would be a really aggressive buyer if we got such a pullback.
Okay.
A lot of great opportunities.
Like it.
And then moving on to gold. So gold, and we've been covering this in our videos on our daily charts and weekly charts. So obviously this is longer term perspective. Gold's been on a pullback since frankly July, and it's presented a lot of opportunities to take profit or short. But I believe right now that we're very, very close. If we haven't already bottomed, we're very, very close to bottom in gold. And what you see here is
Cup and handle.
Cup and handle. Exactly right. Very bullish, rounded bottom. All dating back all the way to 2009, broke out of the neckline here around 1650. There was another neckline here, 1350, and now we corrected, and we're back finding support here at that 18-month moving average and bouncing right now. And so whether you're looking at the daily or the weekly, now gold is starting to look constructive. We're bouncing here at that 50 RSI level, and so I'm a buyer right now. I think gold and silver look very, very attractive at these prices.
Okay.
When you look at platinum, go ahead, Dave.
Okay.
No,
I'm just saying that the one thing that could upset, that also could be a trigger for corrections, or even like you said, gold may have bottomed, or there could be one more challenge and go to 1600. And I think it may do that because I don't think dollar strength has completed. We're pulling back, but if we get another run in the dollar, it's going to be interesting to see if, and there are times when you have a strong dollar and strong gold. Right. So it's going to be interesting to see how the PMs react if we say take the Dixie back to 96 from where we are now. Okay.
Yeah. And I can see the dollar getting back there, and that's definitely on my radar. But as I look at platinum here, platinum's probably my favorite precious metal right now, given its relative value to gold and silver. I mean, look there, it's trading in terms of momentum at its highest level. That makes us too. Yeah, you guys are on the same page?
Yeah, I've been saying it for a long time. I think platinum is an amazing long-term opportunity.
And Dave, most of my career, platinum always traded at a premium to gold.
Yeah, 1.5 premium typically.
Yeah, I mean, for I'd say 20 years of my career, I mean, I think it's been the last few years since that changed, probably since 2011, the gold peak up there. But yeah, I mean, if we just revert back to what was normal, we should see 2000 or better, right?
Yeah, and I love to look for long-term divergences in the macro, in the macro charting, and platinum has one of the best I've seen right now in the market. Look, RSI right now at 69 is the highest level it's been in since the breakdown in 2008, right? So it might take months, years to play out to get back to 2300. I can't predict the future, but it's going there, and it's probably going much higher than that. So when I see such a breakout here, that gets me extremely bullish. Palladium, not shown here, but palladium obviously ran from, I think it was around 800 to about 2700 here. And so platinum and palladium, they're kind of part of the same family. When palladium becomes too expensive, companies, especially for these electric vehicles, move over to platinum. So it's kind of one of those relative demand things. So I think platinum looks fantastic. Looking very quickly at the gold miners, and this is what gets me bullish on gold, on the gold thesis.
They're holding up better, right, Dave?
Say again?
They're holding up better. When gold had tested its previous low and had a double bottom, the gold shares put in a higher low.
Yeah, you're absolutely right. And this here is a monthly chart, but when you look at the weekly chart and the daily, the gold bugs index and other ETFs relative to gold are actually breaking out already. So they've already broken out of some of their momentum bullish flags. So when I look at bullish flags, I do price and I do momentum, and the momentum gauge is leading price on the relative ratio, which is what you want to see in a breakout. So it might take some time. Obviously, we're pulling back today. Consolidations are healthy, but I think we're setting up for a very, very nice run to that 650 level over the next 12 months or so.
Nice look.
Yeah. Move this here real quick. All right. Now, when I look at silver, I think has some of the best volatility in terms of the upside, but it's very much range bound right now between about 22 to the downside and 30 to the upside. Once 30 is breached, I think we're going to make a pretty clear shot towards 50. The most important part that I see in silver here is that we're getting higher highs and higher and higher lows, and so it's a question of when, not if, silver really breaks to the upside here.
Okay. Does it bother you at all that gold has made new highs, taken out 2011 highs, and silver, if you covered up the title and you remained unbiased about precious metals, couldn't you say that this is just a correction in silver back up to, this $30 level from the highs that we had in 2011 and the lows we had? You know what I'm saying?
Yeah, you could absolutely make that case. And obviously, at that point, you have to talk about supply and demand and so on, the industrial nature of silver versus gold and so on. But when I look at silver, it's broken out of many long-term relative ratio charts against gold. And so I think we're just in a relative pullback right now. Okay. But yes, that's definitely one of the ways one can look at it.
Well, that's one of the bearish arguments for gold, is that silver did not confirm the gold move.
Yeah.
Whether it's valid or not, that's what they're hanging their hat on. Go ahead.
You got that.
All right.
Yeah, absolutely right.
And uranium. Yeah.
Uranium. This continues to be the most asymmetric risk reward of my trading lifetime.
Yeah.
I think uranium is, we're still in the second inning of what can be a major move. And what I'm showing here is the price of Uranium Participation Corp. That's one of the proxies for the price of uranium. And despite the pretty major move that we've seen since the March lows, Uranium Participation Corp hasn't really moved out of its range yet. It hasn't even broken out, between 350 and here on $6 to the upside. We're just now hinting at a possible breakout here. And above that, frankly, there's blue sky all the way to 950 on this particular indicator. I'm not going to go into the supply and demand reasons why I'm so bullish.
And this is traded in Toronto. Any reason why you chose this ETF?
Yeah,
well, is it an ETF or a stock, a company?
It's a company that is basically a holding company for uranium, physical uranium.
Like royalty type company, right?
Correct. In my opinion, it's on the North American exchanges. It's one of the best just barometers for the price of uranium. Some reason stock charts just simply doesn't have uranium futures right now, and I don't like that.
Do you think any of these would suffer, say, if we had a 20% pullback in stock in equities and we had some risk off?
Yes, I think so. I mean, ultimately, every correction is different because if a correction is led by, as one of your previous guests said, a commodity squeeze to the upside, then perhaps not as much. But any deflationary style correction will cause uranium to pull back.
Okay.
And not necessarily the price of uranium, but certainly the equities. They're a lot more correlated. So speaking of equities, I do want to just touch on the Ura Global Uranium Etf, right? That's readily accessible on the U.S. exchange. So first and foremost, look at the volume here over the last 5 months. Massive move to the upside. We are about to break out of a 5-year range here around 21, and from here, I mean, I think this can double or triple. So the larger names can still go 2-3x from here. Cameco it comes to mind, Kazatomprom, but the smaller names can go 5-10x. Easy, and then one or two names can go 50 to 100x if we look back at the old cycle from 2004 to 2007. So supply and demand is fantastic. The chart is a screaming buy right now, and so I'm very, very bullish on uranium, and I have been for better part of 18 months, and I continue to be so right now.
Okay.
And Dave, Dale, how much time do we have? Just
10 minutes.
Okay. So we've got a little bit more time. Going through the overall theme of commodities and kind of a lower dollar and a bullish equity environment. Here's an index for the emerging markets. You see here, we have on smaller time frames broken out already, but I don't think we've actually broken out of the price range that we've been in since 2005, between roughly, let's say, 750 here on the downside and 1340 on the upside. Teased it here, but we were basically rejected at that 69.1 Fibonacci level, consolidated, and I think we're starting that upward move after the back test. So I think that emerging markets, if you're gonna, I don't really trade the regular equity markets. I just don't like the risk reward there. But if you're gonna do it, emerging markets are the way to go, in my opinion, right now, because there's just much more upside here, and it's related to commodities because they're so heavily weighted in that sector.
Okay.
When you look at China, this is one of the most interesting charts for me because there's obviously a lot of geopolitical discussion about China and the U.S. and so on. When you look at the price of China of the Shanghai index, we've been consolidating since 08 here between 1664 on the downside, and although we did have that attempt at breakout in 2015, roughly 3,600 here. But when you look at this consolidation, basically higher highs, higher lows, and now we're back testing successfully the 61.8 Fibonacci level. Once that breaks to the upside, if it breaks around 3,600, I think that you're going to see a major move in the Shanghai index, one that could potentially be a 2x move in one of the major indices in the world. And obviously that's going to impact commodities and the emerging markets, but it's just a general sentiment indicator, in my opinion, of the global reflation trade.
Okay. China way underperforming everything.
Recently.
Everything.
And this is why, I don't necessarily trade these markets, but I look to them for perspective. I think it's so important to see what's happening underneath the surface.
Okay. I actually think that China might be the reason for a pullback in domestic equities, but the markets can't have it both ways, Dave. I mean, back in 2008-9 when we were in the soup, China wasn't, okay, and they were the growth engine for the globe, and analysts were saying that they would help pull us out of that recession. Of course, we know who pulled us out of it,
right.
But if that's the case, that if China, which is starting to pull back on QE liquidity, has some problems, I think that could also filter into global markets as well. So important that it breaks out to keep this global recovery going, don't you think?
Oh, without a doubt. I think the world can't continue going higher if the Chinese market doesn't.
Okay.
Yeah. So one of my favorite ways to play the commodity cycle that we're all seeing here is dry shipping. We've been on this trade for a while, but I think we're relatively early. We just now got a bullish crossover here in the moving averages. RSI is at its highest level since this ETF was in existence. Now, this ETF is relatively young, but I think when this breaks this 22 level, I think we're going to see a major move in the shipping stocks, many of whom have been absolutely killed over the last decade. So they're trading on pennies at the dollar. Some are better than others, but I think this is a great way to play the commodity boom.
Okay, a nice looking chart. Okay.
Yeah, and we can certainly pull back. But
what's the difference between this and the Baltic? Was what people used to really pay attention to. Was it called the Dry Baltic Index or something like that? Do you know what I'm talking about?
So the Dry Baltic Index, as I understand it, and pardon my ignorance if I'm wrong here, but I think that tracks the actual price of the commodity that the shipping companies actually make when they store, whereas this is the actual companies and their underlying equities. Okay.
Thanks for the clarification.
You got it. So very, very much related to shipping is crude oil. And we've been kind of pointing out kind of the bullish nature of this breakout here. And while a pullback like we've had over the last couple of weeks didn't surprise us at all. It was very healthy. I think this, in the grand scheme of things, is just getting started. We've back tested this trend line breakout here. Potentially we can pull back to the 50 level to back test these moving averages, but we've got the bullish crossover, and I think we're going to set up for a move not only to 75 area, but ultimately move into the triple digits over the next 12 months. And that would be extremely bullish, at least in the short term, for obviously commodities and bulk shipping and so on. But down the road, as your guest said, potentially that might create a situation where it's going to cause for equity volatility.
Okay. What if we go to 35 first? Would that upset your uptrend? Because I don't think it would.
Well, I mean, I think so. I think so. If we went to 35 here, I think we'd have to reassess and see how. And my whole style of trading is frankly very simple. I just like comparing RSI momentum relative to price over different at different price points. And so long as RSI is showing relative positive divergence, then for me that's a good sign. If the opposite is true, then it's a bad sign. So unlike most people who focus on price, my primary gauge is momentum. And I know price creates momentum, but that's just kind of how I approach analyzing stocks on various time frames.
Okay, so Dave, let's assume that you're right about a commodity super cycle and higher prices across the board and everything you've shown. What would be the worst performing asset class in that environment?
Well, I think the US dollar, if you consider that an asset class, that's obviously a currency, that probably goes down into the 70s. If this view were to occur, and ultimately, I think interest rates are going to be moving higher, so bonds are going to get hit.
Yeah, okay.
But at the same time, I can also see growth equities continue to get hurt, even though right now they're kind of breaking out of the short-term consolidation. But in the long run, they're just going to get repriced, and their relative valuation to value won't be as high as it was over the last decade.
Okay, so FANG is going to be an underperformer for quite some time compared to value and cyclicals, right?
Generally speaking, yes, that's that's what it looks like.
Okay.
And then finally, just want to touch on the chart of Ripple here. I know we touched on Bitcoin here earlier. Yesterday, I was talking to a Bitcoin manager in Singapore, and she was talking about kind of the overall market, which is a fascinating discussion for another time. But when I follow Bitcoin, Litecoin, Ethereum, and Ripple, really it's the four names that I'm following. I'm seeing mixed signs. On the one hand, I was looking for potentially a deeper pullback, and every time I see that, it seems to rally once again and break out to new highs. So in the context of crypto, Ripple is really my favorite chart, followed by Litecoin. I think that right now, if we can sustain this 88 level on a weekly and monthly closing basis, I think we're headed to $3. So the risk reward for me on Ripple is the best. I'm not going to speak to kind of whether these currencies are fiat or not. It's above my pay grade, frankly. But Ripple looks to me that like it has the most asymmetric upside. I like Ethereum as well and Litecoin. If we're going to be bullish on this theme, those are the three coins that I would be investing and trading in.
Okay, well, Dave, I really appreciate you coming here, and I could tell you're a uranium trader because your analysis was glowing today.
Yeah, well,
well, you know what happens when you get irradiated, you glow. So anyway, very nice analysis on some great telescopic views. I love looking at some longer term stuff, a guy who looks at 4-hour charts and 15 to dial in an entry. It's refreshing to see the forest from the trees. You do a great job of that, Dave. And I want to thank you, my trading warrior brother, for coming back and updating us on uranium and giving us great looks on commodities. And look forward to talking to you down the road in the rotation. And hope that all your forecasts and positions continue to benefit you and all the people that follow you and listen to you, Dave.
Yeah, Dale, thank you so much for the opportunity. Before I sign off, I'm just looking at the chat here. Polkadot, Brock mentioned Polkadot. In yesterday's conversation, she was most bullish on this Polkadot. I've never heard of it prior to yesterday's call, but it's certainly something I'm going to do some due diligence on. Have a great rest of the day.
And Dave, we got a minute. What's the best way for people to get a hold of you? On Twitter at Moneyology, or your website, or what?
Yeah, I'm most active on Twitter at Moneyology. You can find me at dave@moneyology.com as well. My website, moneyology.com, is live and active. It's not as I'm just too busy. I'm not updating every slide. That it kind of frustrates me, but I do. For the premium subscribers, I make videos, about 3 to 4 videos a week. I'm about to post a uranium review. I also have a la carte videos on Patreon for those who just want to have access to one asset class, such as uranium, or one sector rather, such as uranium or precious metals. Patreon allows you to do that. So that's Patreon at Moneyology.
Any, before I let you go, any view on kryptonite?
You always ask me that, Dale, but it's way too early for me.
I have a view for kryptonite.
Well, okay. Well, you're like Superman at ForexAnalytix. So
that's what I wanted to say. Heads if you're Superman.
All right. Well, thank you so much again, Dave, and I'll be in touch with you. Maybe we could get back together, say July-ish. Something
Sounds
like
great.
that. See how things are
unfolding.
And so remember, everyone, don't just count your uranium, your uranium and copper and commodities and things that when they fall that hurt when they hit you on the foot. You got to count your blessings. There's always something to be grateful for. I'm grateful for the team that I work with and Steve's kitty cat.
Indeed.
And encourage everyone to become part of our community. So that's it. There's Dave's Twitter handle. Thank you again, Dave and Steve, and we'll see everyone tomorrow. Remember, the morning edge begins in 15 minutes.
Yes.
All right, everyone. Adios.
Ciao.